right now could be just 3 weeks away from defaulting on its debt. That could mean millions of jobs lost, people not getting their Social Security payments. People believe it would put the U.S. economy into a recession.
Just like regular people, the government has to make and spend money, and they do this through taxes, custom duties, Federal Reserve earnings, etc. But this does not suffice, so the government borrows money. This is U.S. Government Treasury Secretary Janet Yellen, and she is warning that the U.S. government will run out of money as soon as the 1st of June if Congress, that is Republicans and Democrats, do not agree to raise the debt ceiling. So they'll have to find other ways to make money, like increasing taxes, cut spending, and even sell assets. Now, this will not be good for the markets, hence why we are actually exploiting what this debt ceiling is in this video. Hello and welcome back to the channel. My name is Herve, and every other day on this channel I try my best to bring you crypto in the easiest way possible on the internet. If that's the type of content you find interesting, be sure to like the video and subscribe to the channel with your notifications on so that you do not miss any other value-packed video like this one. With that said and done, let's just jump right into the video. So simply, the debt ceiling is a limit to the amount of money that the federal government can borrow. The concept of this debt ceiling was first introduced in 1917 with the Second Liberty Bond Act, and this was done to provide the US government with more flexibility in financing World War I. The debt ceiling allowed the government to issue bonds and borrow money without seeking individual approval for issuance. Ever since its introduction in 1917, the debt ceiling has been raised numerous times, about 74 times, to accommodate the growing financial needs of the government. Increases in this debt ceiling have been necessary to cover for deficits resulting from various factors such as wars, economic downturns, and increasing spending. After this introduction in 1917, the initial limit was set to $11.5 billion. This ceiling was increased throughout the 20th century, and some notable cases include raising the ceiling to $45 billion in 1939 to fund government spending. In 1941, the government raised the ceiling to $65 billion, and 40 years later, in 1981, the ceiling was raised to $1 trillion and increased to $3.2 trillion in 1990. In 2010, the ceiling was raised to $14.29 trillion, and in 2013, the ceiling was suspended, allowing the government to borrow without a specific limit until February 2014. And the same 2014, it was again suspended until March of 2015. Now, in 2015, again, the debt ceiling was raised to $18.15 trillion. They should just take it off at this point. And in 2017, it was again suspended until December of 2017. In 2018, it was raised by the Bipartisan Act to $21.88 trillion. And in 2019, it was suspended until 2021.
Our country is being destroyed by stupid people, by very stupid people.
Anyway, note that this ceiling was suspended in a period of zero interest rates. This combination was the perfect recipe for the strong bull market that we had in 2021 and the previous years. Now we are in a period of high interest rates, high inflation, and the debt ceiling is over $31 trillion. I hope by this information you understand why some bears will be still bearish and why I think Bitcoin still has a chance to go to 3,000. It has clearly been in a bull market all along. It's like an addict that has been on drugs all along, and sadly enough, he has run out of drugs. Now, you might be like, the government can just raise the debt ceiling again, and we continue in this hypothetical drug. However, there's a problem. You see, what we have been talking about is for the government to raise the debt ceiling, and as we have previously mentioned, the debt ceiling is a set cap to how much the government can borrow, which means the government only raises the debt ceiling when it has elapsed its borrowing capability, which further indicates that for the government to raise the debt ceiling from, say, 31 trillion to another figure, it has to have borrowed 31 trillion already. So increasing the debt ceiling means it is borrowing not to actually use it in running the country, but to pay its debts. This is bad because the government probably needs more than twice this amount to pay off their debts and have some to use for their programs. And the cycle repeats over and over.
It's all a fugazi. You know what a fugazi is? Fugazi, it's fake.
Yeah, fugazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real.
Right?
Right.
Jokes aside, something we have to note here is some companies like Tether hold some undisclosed company bonds, and in my opinion, they are probably associated with government debt. And yes, on their website, they do have a disclaimer, and I quote, "Tether reserves the right to delay the redemption or withdrawal of Tether tokens if such delay is necessitated by the illiquidity or unavailability or loss of any reserves held by Tether to back the Tether tokens." Bonds, that's the reserves we're talking about. And Tether reserves the right to redeem Tether tokens by in-kind redemptions of securities and other assets held in the reserves. Simply put, if the markets were to drop today and you go to Tether and ask them for fiat, they may give you these debts. Just something we should know. Anyways, so what will happen if the government cannot raise this debt ceiling? How will it affect the markets and particularly crypto? First, we will probably see a partial or complete government shutdown with the suspension of some non-essential services and layoffs of federal employees. The government may not be able to pay their own debts or redeem bonds that have reached maturity, and this will be considered a default, which will badly affect the government's credit score. Now, a lower credit score will increase borrowing costs for the government, which may also affect interest rates in the economy. And this goes without saying that global confidence in the US government's ability to manage its own finances will be gone, which will weaken the dollar. Now, you might be like, okay, a weaker dollar will be good for Bitcoin, which essentially will be good for crypto. But to that, I would say not exactly. You see, failure to raise the debt ceiling may cause uncertainty for consumers and businesses, which will naturally cause them to reduce spending and investing, thus a general slowdown in economic activity. This will put us in a situation where investors will have to sell their riskier assets. And yes, one of these investors here is the US government. Well, not particularly investors, but they do hold a lot of BTC, and we're talking more than MicroStrategy and Tesla combined, about 205,000 Bitcoin. As these uncertainties become certain, the markets will respond accordingly. Investors invest out of what they expect in the future, but recently we have seen a slowdown in price action, suggesting uncertainty in the markets. Raising this ceiling will most likely cause a rally, and defaulting will most likely crash the markets. Whether they will also raise the ceiling or suspend it this time around for fear of economic downturn is what we are yet to see. However, this is all a ticking time bomb that will still implode someday, and raising this debt ceiling will only push that date of implosion to a later date in the future.
And by the way, you're going to default eventually anyway, but it's going to be much messier. And I don't believe they're going to do a default because I think the Democrats will absolutely cave.
My best guess is that they will probably suspend it like they did in 2019. But of course, it is just a guess. We do not know exactly what they might do. Thanks for watching the video. If you did like it and learned anything from it, please leave me a like and subscribe to the channel. I will see you in the next one.